Good day. This is the second part of the first ever topic for managerial accounting part one. And again, this is all about accounting information systems. So what we are going to do this session is just a continuation of AIS. If you can recall, we have already made or published the part one, so make sure to check that out before you watch this continuation. To continue, we are now on characteristics of useful information. So for information to be considered useful, it should have the following characteristics. Now, these characteristics have been known by you even in other accounting subjects or perhaps management subjects. So if we talk about relevance, it serves a purpose. It creates a difference as to the decision making of the users of information. Timeliness is that as soon as the information is needed, it's available. Accuracy, of course, we know that it should be free from errors, which are material. Errors are normal for as long as they're within the bounds or the range for such to occur or happen. Completeness is when all information needed to be able to make wise decision would be available. And aggregation for all important information so that they would be in readable format is under summarization. So these are the following characteristics. Now let me just go with the relationship timeliness and accuracy or versus. Now sometimes because we are focused with accuracy, that the report that we are furnishing is no longer available within the time period that it is needed. So it is useless for an information to be 100% correct, but it is not there when it is needed by the users. So that's why there should be a striking balance of timeliness and accuracy. Okay, after that will be on a business context. These are the objectives of information system. Basically, an IS is there to support, number one, the stewardship function of management. When we say stewardship, that basically means guardianship or safekeeping function. So basically, the information system should be protected, should be nurtured and taken care of, and properly taken into account of the management. Next is that it will be used for decision making, and of course, for the rank and file employees and the lower level managers for the day-to-day operations of the business. Next, the structure of the organization in terms also of IT can be traced with the ARA. I would say that the arrangement is ARA. I'm basing that to responsibility accounting discussions of management accounting. So basically it's authority, responsibility, and accountability. I kept on saying this, that when there's authority or power, then there should be a corresponding responsibility to that, because great power comes great responsibility, meaning it's equivalent. So in other words, it is not good if there is power, there is authority, but no responsibility. Absolute power corrupts absolutely, as said. Now, another one is that after authority, responsibility, there should be accountability. So one should be answerable, one should be accountable for whatever responsibilities and authorities there are. In businesses, we need to be dividing, or we need to be segregating them based on business functions. These functions normally are segmented because they shouldn't be placed on the same group of people or persons. They are basically incompatible functions. So here are the functional areas. So we have the following items. So these are basically the functional departments that we have known of in our management subject. So example of that would be purchasing. That's inventory or materials management. That should be separated from production, that is in charge of conversion the raw materials coming from the prior or the purchasing, then to produce the finished products, as well as the marketing and sales, the distribution or logistics, personnel, that's human resources, finance should be separate also in terms of safekeeping of money, even accounting, that's another separate department, and IT, information technology, which is really the subject, information system. So information system is an old term of information technology, but they're the same, of course. All right, computer services or IT or IS or EDP, electronic data processing. So those are just some of the functional areas. Now, in accounting independence, this means that accounting is really a discipline that should be separate and independent of the other functional areas. Otherwise, it will be easy to commit fraud, fraudulent transaction. This is also for the protection of the company's resources because in accounting, this is where the end part of the ARA, authority, responsibility, accountability comes in. That reporting should be there and present and should be available for the users and the people composing the organization, whoever they are. And then the functions with information would be there in terms of support, but accounting is like a back end job, backstage. It does not actively participate. It is there when all transactions have happened already in the organization. So the decision makers require that such vital information be supplied by an independent source to ensure its integrity. So here are the computer services function being shown, that there are two types of data processing. In fact, this has also been discussed in cost accounting subjects, that there is the so-called centralized management, even management subjects, and also decentralized or distributed management. In centralized, it is only like the heads should be making the decision. They should be approving, disapproving, rejecting, accepting the proposals or whatever decisions needed to be made. While decentralized, also on top of that, the different departments are given the capabilities, given the opportunities to make decisions for themselves. However, there's no perfect centralized and perfect distributed nowadays. It's going to be combination, because if we give everything to our subordinates or branches or like our subheads, then it's going to be dangerous because supposedly there should be principle of check and balance. So whatever decisions that they make, the heads should also know. So that's why most companies fall in between. Certain percentage centralized, certain percentage distributed. Next, there is an example here being shown about a centralized system. So you can just see that here is the head business organization and these are the functional departments. What the computer services have their following functions: systems development, database administration, data processing, and of the following items below them. Now, it's shown here as to the computer services function because that's the focus of these discussions. On the other hand, this is distributed. So if we can notice, for every functional department, there is an IPU unit, information processing unit there. And of course, these IPU units, of course, would be processing the particular information needs of these departments or particular departments. So let's go back to the previous one. We can compare. Like in centralized, everything is here, but here it's delegated. The IPU or the EDP or ITIS functions are separated or segregated per department. Now, what are the advantages of distributed data processing? So we can say that we can reduce the cost. That is because we can eliminate redundant data. We can also minimize duplication of them, and we can focus now on more analytical things. Another one would be in terms of cost, we can identify the IPU connected to each department so we can determine the costs of each, not as a whole, and we will be able to check properly and evaluate properly the cost of each responsibility center or department. Then each user will be satisfied more or better, or there will be chances that they would have improved satisfaction because the IPU is closer per department, not as a whole. Then backup can be improved because we have many multiple data sites. Next, what about the disadvantages? There will be loss of control, although a percentage of it because there has been delegation now. Another one is there could be mismanagement because more people are involved. Another one is that for every department, there could be incompatibility. So the software and hardware of each or vice versa would be incompatible. If not, managed properly and diagnosed properly prior to DDP. Redundant tasks and data could also happen. And as much as I've said that we can eliminate them, but it's also possible like at the onset because there are many IPUs. Consolidating tasks usually segregated. Yeah, because there are many of them again. So in terms of grouping the information, it would be challenging since again segregated already. Then yeah, that's the difficulty of attracting qualified personnel since it's going to be like very specific. You have the IT function plus the functional department like marketing, like human resource and etc. Then there could be lack of standards of each. So it's quite challenging to make standard or set standards for each IPU for each functional department. Now, let's have manual process model versus the database model. And manual process model, we use paper documents, and these are physically performed by people, so prone to errors and more time in calculations. Useful to study manual because, well, we can link AIS to other accounting courses. Then it's easier to understand because it's not shrouded, it's not being with or immersed with or really connected with technology. Then this also helps us understand internal controls, meaning internal controls are the processes, steps, procedures that would ensure that our operations are effective and efficient. Okay, although there can be, by the way, in discussion of internal controls, there can be many purposes. So this is the example of the flat file model under traditional, wherein we can just notice it's called flat file because for every user or functional department, there is a standalone application and there are also data sets for each. That's flat file. So there would be issues that the data would be redundant. There can be more cost involved because of more data there. Then updates could be done multiple times. Remember, there are different data sets there available. Then information, currency of information is that we would be able to have failure to update all affected files. So again, challenging in relation to the second one. Then data dependency would be there because remember, there are different data sets, so users would be unable to obtain additional information immediately as needs change. There are many sources to begin with, and it's very difficult to combine or integrate or consolidate those files coming from different users. Now, that's why there's a need for us, or that's why the database model would address those issues. So in a database model, there are different users and then there are different views, but they're integrated to a software, combined to a software, which is the database management system or DBS. And that's why the database is shared. All of these views or information or profile or data or information would be combined in the shared database. Now, that's the advantage. So traditional versus database. Another one is the REA data model. REA means resources, events, agents. So resources are basically the accounting elements, particularly the assets. Events are the transactions, and agents are the persons doing the transactions or involved in the transactions. So example, you have the inventory being sold. So the asset is inventory, the resource, that's a resource, and including the sales or receivables if, for example, that's on account, or cash if that is by sale. Event would be the sale force and the agent would be the salesperson. If this is the collection now, resource would be cash, event would be the cash collections, and the agent would be the cashier. So something like that. Okay. That's why we see here the REA. All right. In REA model, this is the framework for accounting that would be easier for us to analyze, wherein we talk about resources, events, and agents, and their relationships with each other or interrelationships. And to be able for us to easily understand, that's why there are entity relationship diagrams or ERD. For accountants, we can be of different functions or have different functions. We can be, for example, users, designers, or auditors. So as users, basically, we have also our needs on the system, especially with accounting or in terms of accounting tasks or jobs that we need to do and we need to furnish. Then accountants should be involved in the system development because to begin with, who will be using these accounting softwares? The accountants. So how can they best know that they would be the designers? How can these designers know of what's best for the users? Then ask the users because who knows best the needs of people than the people themselves or the users themselves. So we have to ask them. That's why the second part discusses that they should be involved in the process. Then system designers should be that also accountants are users, so basically they can also conceptualize, can help in the designing of the system. In conceptualizing, we know or we should know the nature of the information required, the sources, meaning where would information be coming from, the destination or the output or the source, including the destination or the output storage or container, and the rules that must be applied. And finally, we have auditors. So auditors could be external or internal. Internal, if within the business, subject to payroll of the organization, there is a department for some or just a table or a staff holding that, but should be independent of those in the line functions or those who are really in charge with the main line or objectives of the business, and could be also external auditors which are recruited and paid with professional fees. They are coming from auditing firms or the likes which are outside the business. So external auditors would provide the fairness of financial statements or reports, of course, since the reports are obtained coming from the systems. Then assurance services would be broader in scope, not just the traditional like the FS. There could also be like IT audits. IT auditors evaluate IT often as part of external audit, but IT auditors can also be within the business or there's again an IT department that is in charge for audit. All right. So internal auditors are also in-house or can be in-house IS and IT appraisal services. As what I've said, IT auditors can be external or internal. All right, so that ends our discussion for the second part of accounting information systems. Hopefully you learned something from our discussions, and I'll see you next time for another discussion about accounting information systems. So hopefully you learned again something. Good day and God bless.